Good morning. It's Vijay here. Today is 4th November 2024, Monday. Welcome to yet another episode of Pre-Market Commentary. Today, we are going to talk about what happened last week and what may happen today. And more important is how do geopolitical risks affect the market. So let's dive deep into it immediately. So there we are. Okay. Geopolitical risks are very important for the market. Fundamentals of corporates are one thing, but geopolitical risks overshadow all of this. We have had many such risks. For instance, last month we had Iran bombing Israel, Israel bombing Iran, and then we had some risks in April, some risks in September. So we've had these geopolitical risks quite a bit during this year, but we have survived all of them and the markets have tended to be stable or higher. Now, this week is the mother of all geopolitical risks. There are two major risks. One is the Israel-Iran war. Clouds have again started resurfacing. They are slightly grayish clouds now, whether they'll become darker and the storm will start coming into our markets. We have yet to see. The biggest of them all is the US elections, which is tomorrow evening for us, and that is Tuesday, 5th November in the US. So we will react to that only day after tomorrow. So the next 2-3 days, I think the market will be on tenterhooks. So one has to, in my opinion, trade lightly. In fact, I'm planning not to trade for the next 2 days and just watch from the sidelines. Sometimes it pays, to not trade. So that is as far as the political risks are concerned. Just a minute here. Yeah. Sorry. And then, so what happened on the day of the Samvat 2081, typically it opened lower and then it opened higher. I'm sorry. I'm in a different location because I'm traveling for some time. So you will see me in different backgrounds for some time. So you had the market opening about 24,300 levels, but couldn't sustain higher levels, but still closed 90 points on the Nifty. And broader market also could not sustain. See, why this happens is a very typical pattern. People, the smart guys, buy more trading day and accumulate it and then begin to sell on that, because usually the crowd is told that we should buy on more trading day. Normally, I also do that, but this time I decided that I will sell only one script and buy about 10. So 1:10 this time, and after a very long time, I've been a buyer in the 10 stocks which I had indicated, which may do well between Deepavali and Pongal. So that I have put my money where my mouth is. I've created a special portfolio to check out what will happen between now and Pongal in those 10 scripts. Typically, my strike rate is 60%. So I'm hoping that 6 out of 10 scripts will take care of the 4 losses which I'm anticipating between now and Pongal. So small caps rallied for the 5th consecutive session. See, the money is moving into small and micro caps. People thought money will move into large caps last month, but it has actually moved the other way around. Then Nifty Auto was the top sectoral gainer because the monthly numbers came in for the autos, and all of them were beyond expectations, because most people had expected that because of some 73,000 crores of inventory lying with the dealers, so things will not be hunky-dory. So that is as far as the autos were concerned. Then we move on to what is the cues this morning. We have had, if you just look at it, Nifty has closed in the green last week as expected and unexpected by many people. Normally, the 5th week will always be good for the bulls. Mid cap has gone up after 3 weeks. 2 weeks it was down, and then the 3rd week it has gone up. Small cap has gained over 5%. People have not noticed it. PSU Bank is the hero of the week with about what was that gain? About 7%. And I've been very bullish on PSU banks in our Muhurat list. For Pongal, we have 2 PSU banks, Canara Bank and PNB at number 1. So I expect PSU banks to continue to do well. Metal also snapped a 3 week losing streak. Realty went up about 3 week per 3% because generally before Deepavali, realty is one thing which is in the limelight. Energy snapped a 4 week losing streak. FMCG snapped a 5 week losing streak. IT, of course, was the decliner because of the elections and because if Trump comes, tariffs will come. In my opinion, there will be no problem if Trump comes on IT. IT will perform as per their performance and not based on Trump's tariffs. Of course, one will look at Accenture or one will look at other companies and see their performance, but our IT companies are slightly different. We also have a domestic market, so I'm not expecting much to happen if Trump comes. Whether Trump comes or Harris comes, I think fundamentals will overrule all that geopolitics. But leading into the elections, definitely geopolitics will affect the markets. Markets will be nervous, markets will be volatile, and they will be led by rumors. So that one has to take care of. So US markets closed higher. In fact, they took off on bad news, which was the employment numbers came very poor, but that is expected because of quite a bit of disruptions in the month of September and October. So therefore, there was nothing to worry on the US markets. Of course, they came off their highs because there was some tension that the Iran-Israel imbroglio will only increase. Oil prices went up not because of the Iran-Israel issue, because of the delay in the their output, which the OPEC has agreed that they will push it to 1 month later. So that means supply will be tighter, not tighter. So for 1 more month, so the oil prices went up. But if the Iran-Israel nothing happens, then I think we are in for a good 2 more months ahead. Now, how did India perform for the rest of the week? India performed very well, 0.5% up. Nikkei was second at 0.25. After a very long time, India outperformed the global markets. Dow Jones was down by, it was almost flat at 0.15%. Hang Seng was down by close to 0.5%, about 0.4. European markets did poorly. DAX was down about 1%. And then S&P 500 also did poorly, basically because of the tech debacle which happened through the week. And so S&P was down by 1.37%. Nasdaq was down by 1.5%, and Nasdaq 100 by 1.57%, and Kospi, which is again tech heavy, was down by about 1.5%, 5.8%. Oil, I said, and gold was flat. Silver also was flat, and that's where we are. So the good thing was that India forex reserves have gone to an all-time high. We are today at around $704 billion. I can't imagine we were just about $2 billion when I started my career in 1991. So we have come a long way. I think we have got enough money, enough and more to sustain any attack on the rupee. So all in all, things are not bad at all. Things are in a situation where our market can continue to go on its what we saw on Murat. Incidentally, this is the first time I've seen after a very long time, on Murat trading day, the market held its ground, though it was off the highs. That is expected, as I said, because the smart guys are not exactly smart guys. So-called operators begin to sell, but the market held the prices well. Of course, the institutions were very minimal, only about 200 crores, but that is not important. What is important is, market did not collapse on that day. So that, I think, was a very good sign. And I think the way things are overall, fundamentally, we are poised for higher prices. However, geopolitics can spoil it all. We can only hope that the mullahs of the Iran know their strengths and weaknesses and keep away from trying to muddy the atmosphere. So all in all, I think it will be a happy Monday. As I said, I'm not going to trade today and tomorrow. I'll just watch and then look at it from on Wednesday. Sometimes it is better to not trade. Already we have invested on Murat Day. We have put our money where our mouth is, as I said, and I think that should stand us in good stead. So whatever you're doing today, I hope it is successful. Thank you for joining me. I am not a SEBI registered advisor. Please take care. Have a wonderful trading day. Thank you.